Hi, my name is Tim Justice. I am the broker of record for Justice Business Brokers. We help people buy and sell small businesses in Oakville, Burlington, Mississauga, and the Golden Horseshoe. This video is about how businesses are valued. The first answer is there is no answer. According to the Institute of Chartered Business Valuators, and that is the institute, and a CBV is the person if ever you do need a value on a business. But according to the institute, it is an art, not a science, very much a black art, and it comes down to opinion, it comes down to circumstance, it comes down to timing. But what I want to explain today is just some of the basic concepts that are used when businesses are valued. Typically, there are two approaches that they use. One is to value the business based on the assets within it. This is the lesser approach. It's not used nearly as much as the second approach, which is the cash flow approach. Basically, how much money the business makes times a multiplier, which corresponds to a number of years. To talk first about the asset approach is used when the business is losing money, and therefore the cash flow would be a negative number, therefore your value in the math would be negative. And what we would do is we'd add up all the marketable items, the assets within the company, and that would be the value of the company. Assets are valued at the lesser of cost or market. In other words, either what you paid for it, or if it has gone down in value, the market now is less than what you paid for it. Whichever the lower of the two numbers is, either cost or market value, that is the value of the asset. And your accountant will know about this. It's a very common accounting term. The second approach, which is typically used a lot more, is the cash flow approach. And the cash flow approach takes the value of what a business makes, multiplies it by a number of years, and that gives you your suggested sale price. And I emphasize the word suggested. Typically what we do is we look at the profit and loss for about 3 years. We want not just 1 year, but 3 years. And what we do is we first normalize the profit and loss. And by normalizing it, what I mean is that the expenses are all made to be normal. Anything that was weird that happened in a given year, that's taken out. If the owner is making a very large salary by choice, but they would pay a general manager a substantial amount less, then we would adjust that salary to be what a market value for that position would be. If the owner has family members who are in the business but not really in the business, those kind of salaries would be taken out, and we would get a normalized picture of that business running without any really benefit accruing to the owner other than profit. We now have a restated picture of the amount of money that comes into the business, and typically it's done as the term is EBITDA, earnings before interest, tax, and depreciation. So there's your profit, and we do it over a 3-year basis, and we put a weighting on the most current year, and then we put a lesser rating for the second year and third year backwards. Now what we do is we multiply it by what's called a multiplier, and that corresponds to a number of years of profit. And typically the number is somewhere between 3 and 6. It varies every single business. This video is really just meant to be illustrative. But what the multiplier is the number of years of profit. What we have is a tool which has 15, 16 questions which ask about general aspects of the business. How attractive is the business? What does the world think of the fact that you're in that business? Are there hazardous materials? Do you own your own building? Is management remaining? Is the business growing or is the business declining? Questions like this, which come down to give you two numbers, one of which is just the inverse, mathematical inverse of the other, but it gives you a capitalization rate and it gives you the multiplier, which is just the inverse of the cap rate. Again, suggested. And I want to emphasize that if two people are looking at this business, you could get two entirely different values. If a person already owns a business like this business, they're probably willing to pay more because they can make more of it by combining the two businesses together. If, on the other hand, the person is coming in and buying the business and has no experience in it, they probably would pay lesser amount than somebody else would. Again, as the CBV Institute says, it is an art. What we typically recommend in order to arrive at the value of what you would pay for business or what you would sell your business is first you put the number down yourself and follow the steps that I've just talked about, where you look at the realistic running of your business or the business that you're looking at. Second is get yourself what I will call an expert, somebody that knows something about how businesses are valued. I will caution you that although realtors are involved in the sale of businesses, very few realtors have any training in the value business, and the Real Estate Commission of Ontario does not train or provide any training materials at all. So if you are using a realtor, question where their experience comes from. But the third and probably the most important member of your triad is your accountant. Your accountant does have experience in this. Accountants typically know what things are roughly going for out in the street. So what you have now is 3 values, and the 3 values should be all in the same approximate ballpark. If one value is way high or way low, then you've got to question why, and you've got to rationalize it. But the short and the quick of it is that the 3 values should give you a reasonable estimate of what you should pay or what you should sell for. There is a very important adage in the accounting world, and that is that you don't know what a business is worth until it's been sold. And that is true for a seller and for a buyer. It's all a matter of what you will pay that the seller is willing to sell for. So the answer does not exist. It is what's going to happen in that unique situation between the buyer and the seller. If you have any questions at all, please give us a call. We can explain this further, and we'd also be very willing to help out if you need some advice on what a business might be worth. Once again, Justice Business Brokers. We are located in Oakville, Ontario, justicebusinessbrokers.com, and we help people buy and sell businesses in the Oakville Golden Horseshoe area. Thank you.